Hello, everybody. So many of you have asked about Canadian Solar in the comment section, and I've asked what I think about Canadian Solar. And so I've decided to make a video based on what you asked, and I took a good look at it, and I have a conclusion for Canadian Solar. It's not all bad. I can tell you the conclusion right now. The conclusion is this stock is not for me, but it's not a bad stock by any means, and that has to do with its valuation. Valuation is true. It's a heavily undervalued stock. And I understand that if you would look at solar stocks, you look at other solar stocks with a value lens, you're going to fall in love with Canadian Solar, because Canadian Solar has an enterprise value to sales ratio of 0.47. A PE of 4. They have a PE ratio, right? Not all startup stocks have PE ratio. They have a PE ratio. And value investors understand PEs very well. My preferred value metric is, of course, EBITDA. I think it makes way more sense for most companies as a proxy for cash flow. Their EV over EBITDA metric is a 4.17, so also dirt cheap with a 24% EBITDA yield. So again, this is very appealing if you are a value investor. But unfortunately for me, the growth right now is at 24%, and it's under my 30% threshold, which means that I wouldn't look at it for myself because it's under 30% threshold. When a stock enters my spreadsheet, I want it to be at more than 30%. And just because of that, I have to be fair with my rules, because 24%, that's only 9% more than 15. And I consider 15% return to be zero return, to be a return that just matches onward inflation and the inflation we're going to have. So, I want to do well over inflation. I just don't want to beat inflation by a little bit. I want to beat it by it a lot, and that's why it's a little low. But, I guess I'm a hyper growth snob. So that's kind of how I try to define myself sometimes. But and if you're a value investor, this is also very interesting to you, because the EBITDA growth over the next 12 months is expected to grow by 36%. So the EBITDA is going to grow faster than the revenue itself, which is a feature of value stocks typically. And lastly, if you look at charts, if people enjoy charts, you can see that the stock is significantly cheaper than it was at the beginning of the year. Granted, it didn't fall as far as ENPH. It's understandable. It probably means that it probably was still a good value in 2023. It fell less far than ENPH. But if you just look at the chart and you look at the level it's back at, it's back at the level of, say, in early 2020. And I would argue the performance is pretty similar to your typical solar panel maker performance. If you look over more than a 10-year period, the stock has essentially gone nowhere, and I will explain why in a little bit, why I believe that is the case. But the numbers right now are compelling. And I think this could be a tempting trade, no investment advice. But so what do they do? Because to me, what's more important than the numbers, because when I look at the number, that's pretty compelling. But what's more important is the context, the business context, the qualitative analysis of the business. To me, the quality of the business comes before the number. And this is what Canadian Solar does. They operate internationally, but they are mostly a distributor and a manufacturer of solar panels. And they manufacture solar panels in Canada, in China, in Thailand, in Vietnam, and coming soon, they will manufacture panels in the United States to get some of these IRA subsidies. They are mostly a manufacturer of solar panel, solar energy. And, 85%, it's roughly 85% of the business that is defined by solar panels. Actually, if you look at this chart right here, it's 85% of Q2 revenue was their solar panels and their corollary technologies. They have a fully integrated inverter system that they do for homes, probably because they have a better margin, and they have a grid storage system, but it's still mostly the solar panels. So 85% of the revenue comes from mostly solar panel division. 15% comes from large projects, from these large projects, operation and development and building of these large solar projects. That's 15% of the business. But I consider this company to be mostly a solar panel manufacturer, and I want to make sure that I revisit a statement that I made in the past where I said that they seemed like a conglomerate. Well, after taking a second look, to me, it's not a conglomerate. To me, it's pretty clear that most of the business is a solar panel making business. What's funny is that a lot of people try to get into the residential solar market. So you can see they have their own system, their own inverter, and they're trying to move into that more profitable side of a business. So that is a sign. But even the smallest companies in solar, for example, Solar is trying to also create its all integrated, all-in, all-house system with a microinverter, with a controller, etc., etc., etc. So it seems like a lot of panel manufacturers are trying to get into that business too, because that's where a lot of the profits are, and I'll get to it in a second. So, anyways. And I consider it to be solar panels mostly also because, frankly, their solar projects, if you look, that's very unpredictable. If you look at the revenue of a large solar install business, it's grown at minus 35% year over year. And, that likely has tremendously to do with interest rates, a bunch to do with interest rates here. But it's not very predictable. It's only 15%. And, CanadianSolar, when you go on the website, when you look at all their pictures, they put a lot of emphasis on the large project initiatives. And in their business documents, they talk a lot about their large projects. And I find this a little bit strange that they would put forward their large utility scale projects forward when it's clear that it's not the main business. And it's funny. The business is to manufacture the solar panels. So why would you put these large projects forward? And that's the reason why I say that is because I think a bunch of the drop that we saw in the price of CanadianSolar can be explained by what happened to other large solar panel project operators like NextEra Energy. NextEra Energy at this stunning cliff as interest rates keep going up. These companies have a stunning drop because these projects and the economics of these large projects to the eyes of the market become much less compelling. So anyways, it's just, I'm nitpicking, but I wish they de-emphasized the focus on their large projects and instead focus on their solar panels and how great the solar panels are and talking about the manufacturing. I kind of wish that's what they did. But the reason why they don't do that, the problem is probably because you can't differentiate yourself too much when you make a solar panel. That is the problem. Solar panels, in my view, are mostly a commodity type product, and a lot of people have nightmares about solar panels. Some of the folks who have nightmares about solar panels are money managers. Money managers got hurt in the first wave of solar investing in solar panel manufacturers. You can see, so First Solar, we're at 17 years of essentially not much for 17 years. Right? So if you don't do much for 17 years and you look at inflation, actually, you've clearly declined for 17 years because the NASDAQ is 8 or 9x over 17 years. So, and you stayed flat. And actually, if you bought at the wrong time, First Solar, for example, like if you bought it in 2008, 2007, but even in 2010, etc., even then you would still be down, right? 13 years later. So there's a lot of nightmares about solar panel manufacturers, and I know they're coming back slowly in style, and a lot of investors are attracted. But when you look over the long run, you see that historically this is a business that has a problem differentiating itself, and that has a problem to scale. And I full well understand, for example, for CanadianSolar, one of the big arguments that they say for their solar panels is our solar panels are bankable. What they mean by that is that they tend to be approved by most banks for non-recourse debt. Non-recourse debt is debt that if you stop paying, they can use the value of a project as a collateral and you can just walk away from the project. Well, even though the solar panels are bankable, right now with those interest rates, fewer people are doing these very, very large installs, fewer companies. So it's really not that big of a sales argument, the bankability right now. And I bet you there are inexpensive Chinese solar panel makers that are also bankable. I'm pretty sure if you look at it at a Jinko Solar, it's likely bankable, right? And it's a leading Chinese manufacturer of solar panels. So anyways, that's one of my points here. And They are a commodity, and in fact, you know that they are a commodity in the way that solar panels are manufactured and sold. Actually, it's funny. They're shipped on these giant pallets, and this is actually very big. This is 8 foot by 4 foot by almost 5 feet tall. So this is a pretty darn big pallet. And you see, this pallet, for example, is just $4,000. It's a little bit of an expensive distributor here. Solar panels are kind of sold like plywood. They're sold on pallets, and I made I think this stock comparison. I borrowed that from Tony Seba, and I made my own, and I checked the prices on my own. And it's true that there are some instances where if you use used solar panels that are 15 years old, they'll be cheaper than plywood even at today's prices. Solar panels are getting cheaper and cheaper, ever cheaper, but they're still very large, and their size doesn't change, and they're actually getting bigger, and they're still bulky. Price is the main thing that matters when someone buys solar panels. It's the main thing that matters, and there's very few ways to differentiate the product. The main way to differentiate the product is, do you want them a deep black or do you want them a deep blue? It seems like deep black is in style and trendy right now, but who knows whether 5 years from now it will be deep blue solar panels that are trendy again. I mean, you can mostly differentiate it based on the color. That's not enough of a differentiation. They all do the same thing. They seem very much like a commodity to me. So in conclusion, I have one point about scale as a final slide, but before I go there, one conclusion is Canadian Solar, I think, is a stunning stock for a value investor. It's got great things going for it. Amazingly low PE. I don't understand. A PE of 4 if you are a mall retailer, that's a terrible PE because it's clearly a business that's going out of business. A PE of 4 when you're Canadian Solar, it's a great PE because in my view, this company is nowhere near going out of business. They make a product that's going to be in demand for a very, very long time. So I see this company as having a business in a growth sector at a very undervalued price. So this is great for a value investor. The EBITDA yield, theoretical, is actually very high and is expected to grow. I think a trade is tempting. If it's your style of investing, in my view, a trade is tempting. No investment advice. But I like to buy a stock and hold it for 10 plus years. And when I look at the performance of a Canadian Solar, let me show you again the chart. When I look at the performance of a Canadian Solar over a 10-year period, okay, let's say we're in 2024 almost. I go back to 2014, you're down. We're down, and this company doesn't pay a dividend. So if you bought this company in late 2013, you're still down to late 2023, and it doesn't pay a dividend. So if you plug in inflation, no, you didn't stay flat. You actually lost quite a bit of money. To me, it's not my style of investing. I want to see very high top-line revenue growth. I want a very high top-line revenue growth because I know it's the only way to beat monetary printing. Because monetary printing is very high, right? The amount of dollars out there grows very high each year. There's many, many more dollars out there. Your stock has to capture its fair share of these new dollars. If the new money issuance is 15% a year, a stock has to capture 15% in extra sales each year just to stay afloat. Which is why when I look at a stock which Canadian Solar realistically over the long run, will they do 20% compounded over the long run? That's great. But in my view, that's just 5% more than the new issue of money supply. Which is why, in my view, these stocks don't move. They don't move much. They don't move much because of that. That is my view. And the problem is that they operate in a physical brick and mortar world with a product that is very much comes with moving a lot of atoms, moving a lot of stuff. You're moving pallets. That's what you do. When you're Canadian Solar, you're moving pallets across the world. You're moving pallets across the world. And it is a problem. And this is my final point about scale. ENPH is known to ship products, but not just ENPH, SolarEdge. They are known to ship products by plane sometimes. They prefer by boat, but sometimes they ship them by plane. And they can afford to ship products around the world very easily. And they can also grow much faster. They can also grow much faster. And let me show you this stock example, which I think is a fair example as to why I don't like solar panels, but I very, very much love microinverters, which microinverters is still the biggest business of ENPH. So look at the size of this box, right? This is 5 feet tall, 8 feet long, 4 feet wide. This is a $2,700 box, right? So you're only selling $2,700 worth of value in this much volume. Imagine that. You need to have a trained forklift operator to move this. You need to have special equipment to move this. You need to have a special warehouse to handle this stuff. Think about ENPH now. This is a carton of 18 ENPH microinverters. You can see the inside of a carton right here. This is a carton of 18 ENPH microinverter. It costs $2,500. You can fit on the same pallet, per my calculation just now, you can fit 80 cartons of ENPH products on the same pallet. So for each shipment that a solar panel manufacturer does, and granted, Canadian solar panels are a little more expensive. So let's say Canadian Solar's earning, say a $4,000 or $3,000 sale, right? This example is Rich Solar, so it's $2,700. In that volume, right, that container can only take 8 pallets, probably. Barely any more than 8 pallets, maybe a little more, right? And so you're not shipping much. You're not moving much volume. You're not creating much revenue. Each pallet is a $2,700 sale or a $3,000 sale. Microinverters, a pallet of microinverters is almost $200,000 of sales. Of one pallet, $200,000 of sale. This is why a business like ENPH can grow so much faster. But by the way, this is also true for SolarEdge, which I am an investor in SolarEdge. SolarEdge, the string inverter, the central inverters, they also cost about the same amount of money as a box of ENPH microinverters, but they can be shipped easily into one box. It's much easier to ship than to ship this. So this is why businesses that focus on this segment of the solar business can grow much faster and sustain that growth much faster that you can do with solar panels, where, at some point you're going to be very constrained by the warehouse, and you're going to have ever bigger warehouses, ever bigger manufacturing facilities because of the nature of the product. So that's why I consider one business over the long term to be much more investable than this business. I think this business is less investable over the long term. As a growth investor, I value a scalable business, a highly scalable business. What makes a highly scalable business? A lot of value in as little atoms as you can, right? The best business is a digital business. If you ship a digital business, you're not moving anything. You're just moving energy. Right, you're just moving digital data in the form of ones and zeros. So you can scale really quickly. ENPH, when a pallet of ENPH products costs $199,000, you can scale very quickly. Even a Tesla can scale much quicker than this, right? Because each time they ship something, it's a car, right? So you can fit multiple cars in a space, much more volume, perhaps 10x more value per volume. So the volume to value metric, I think, is very important, and you can only find that out when you analyze a business qualitatively and do a qualitative assessment of it. So this is why I prefer ENPH. But if you're a value investor, love the stock for value investors. So this was not investment advice. This was just entertainment. Please like the video. Thank you for watching. Please subscribe and have a wonderful day.